You're listening to the Cash Podcast, creating affluence, success, and happiness with your financial surgeon, Adam Koch, President and Portfolio Manager at Libertas Wealth Management Group at libertaswealth.com.
All right, everyone, I'm here with someone I very much admire in Scott McComb, CEO of Heartland Bank, and we're going to be talking about, oh, wait for it, yes, the coronavirus. But we're going to be taking a little bit of different angle here today, getting some answers on how COVID-19 might affect the financial institutions in the United States and the banking system in particular. But before we get started, as always, a few housekeeping items here. If this is your first time listening or watching, then thanks for joining us. The Cash Podcast is produced weekly, and as stated in the intro, Cash stands for creating affluence, success, and happiness, and that's our mission. My hope is for you to learn a little bit more on each and every episode so that you can become more successful, wealthier, happier, and more educated than you were when you started listening today. So come back often. Feel free to subscribe on iTunes and YouTube. In addition, you can also follow me on Twitter at Adam Koch and on Instagram at Financial Surgeon. And last but not least, all links, visuals, charts, and other educational resources are on our website. So that's it with all the formalities. Let's go ahead and get started. So Scott, first of all, thank you so much for taking the time out of your ridiculously busy week to join me today. I really appreciate it.
Adam, my pleasure.
Yeah, well, I personally don't think that Scott needs an introduction here in Central Ohio, but I'm going to share a little bit anyway about him for the few people who don't know. But Heartland Bank has been around for a really long time, since 1911, I believe.
That's right.
And it's ranked by American Bankers Magazine as one of the top 200 publicly traded community banks in the United States. But Scott himself is very much an admired entrepreneur in the banking world. He graduated from the Ohio State University, which means we're already friends. The Ohio School of Banking, the OBA Leadership Institute, and the Graduate School of Banking at the University of Wisconsin, although we won't hold that against him today. One of the things I love so much about him is that he joined Heartland Bank in 1999 as the director of internet banking. Now think about that for a second. So this was a time when no other regional banks, and certainly no other community banks of any sort of had any internet banking presence here in Central Ohio. So, but here's what I think is so amazing. Over time, Scott was promoted within the bank to senior management team, then promoted again to executive vice president and COO in 2004. Then in 2008, he was promoted to president. Then in 2009, just a year later, he was promoted to CEO. And for more than 9 years now, or in other words, since 2011, he's acted as both the chairman and CEO of a very successful, admired Heartland Bank. It's just incredible, really. But honestly, Scott, it's not just the education or success that I admire so much, but ever since I met you at a NetJets event years ago, probably a good decade ago at this point, it was clearly apparent to me that you were just such a good, down-to-earth, salt-of-the-earth kind of guy. And I say this sincerely, not just because you're on my podcast today, but I truly think we need more people like you running big companies in the world today. And I think it's incredible what a wonderfully warm culture you've built at Heartland. But with that all being said, of course, it's not surprising at all because, as they say, it all starts at the top, right? So from the bottom of my heart, thank you again so much for being on the podcast this week. I really
Thank you. What a great intro. It's very humbling. As we were preparing for today's podcast, you and I were talking about the humble beginnings that we both have, and those things. You can definitely tell where people come from by how they treat servers, how they treat the working line folks, and things of that nature. And we're just blessed, right? We're blessed to be in Central Ohio. We're blessed to have been educated by such a great university, and there's a lot of things that we take for granted, but we're just all very fortunate to be where we're at in today's day and age. That's for sure.
Completely agree. And the comment about taking care of servers and just treating people well in general, I think that's a great point. I think you can't talk enough about that. So let's start more on a personal note here. I mean, how is your family holding up with the virus? Everybody's dealing with this thing in their own way, but what kind of changes have been like at home for you?
Sure. Well, I am usually out and about, right? So I'm going, like you say, I go to networking events. I try to get in front of as many people as I can. And this has been an adjustment for me, for sure. I'm a very social person. I'm a hugger. So I'm really jonesing for some hugs from not only my staff and all that, but from my customers and the community. So it's been an adjustment. Everybody's healthy, though. Like I said, we're blessed. We've
great.
been doing really well. My son is actually a golf professional, was in Phoenix, Arizona, drove across back here to be at Scioto Country Club. That's where he's on staff as an assistant professional there. And he had to quarantine for 14 days here at the house. That was a little awkward.
Yeah.
My daughter she runs our Clintonville operation. Her name's Kaylin, and she's our branch manager there. And she has been an essential worker, and she's been on the front lines every day, working at the branch office and dealing with customers. And my wife, she has been my stay-at-home secretary, and she comes in every day and feeds me lunch around noon.
Wow.
And so and I've had a great time there. But she's getting a little pent up, so it's May 1st, time to get out. But besides that, we're all healthy, and I wish the same for you, Adam. How about your family? How's everybody doing?
Things are going well. I mean, I think that, with the whole stay-at-home order and, people, all of a sudden parents becoming teachers, I think that if you didn't realize how tough it was to be a teacher in the first place, now you know.
Oh, yeah.
So that's been really tough. I think there was some rejoicing being done yesterday when we heard, I was watching Donna on the laptop, and when they said they were going to end school a few days early. So that's she's pretty excited about that. But no, honestly, it's I've taken it as a cup half full opportunity to spend more time with my kids. I have a little problem with work-life balance. So this has kind of forced me to be a little bit more intentional, so I'm taking some lessons from this for sure.
Well, good for you. Yeah, the two pluses are you get to work early, right? So you roll out of bed, I get a cup of coffee, I'm at my desk at like 6:45 now. And but the happy hour starts a little earlier too. So I'm already here at 5 when
I don't know what you're talking about. Well, so speaking of work, I mean, how's work life changed for you, being as a CEO of a successful bank?
Well, the bank's been doing really well, and I've got an incredible team, so our president, Brian Montel, is an excellent leader, and it cascades down from there. So we've built a world-class team. Believe it or not, we've had a really, really busy first quarter. We announced our earnings and such earlier this week on Tuesday. And not only were we able to close our first transaction, our first acquisition, in Northern Kentucky on April 7th, but on March 14th or whatever, we did an internet banking conversion. That's like getting a root canal in a hurricane. Okay. And so we had those things going on along with the COVID crisis, which created the PPP program and all of that. And I'm happy to say that we got every one of our customers done on the PPP program. We did not leave a single sailor in the water. And
that was actually one of my questions for you, was that how you handled the PPP, because I know there was a lot of problems with that, especially at the larger banks.
There is. I mean, basically, I've heard some folks, liken it to building the airplane while you're flying, and that's really what has happened. This is not the first time. This is my 5th crisis now, I think, of this magnitude in my career, and you learn over the course of time how to deal with that. The financial industry is paramount in these kind of things. To get up and running, we have to be nimble. We have to trust the federal government, and we're not agencies of the federal government, but we kind of are through the FDIC, and we're regulated by the Federal Reserve or the OCC. The Department of Treasury has a lot to do with what we do, and so they basically said, hey, look, we're going to pass this, and we need you guys to get the money out on the street. And our questions were, what's it look like? How are we going to do this? And how are we going to fund this on our balance sheet? And they said, we don't know yet. Start getting the stuff ready and get the money out on the street.
Wow.
So the same thing happened back in 2001 when the planes hit the building in the terrorist attacks.
Yeah.
That was a direct attack on the financial services industry of the United States. We got a call that day. We were on a conference call at 1 p.m. after the buildings had collapsed. And the message from the Fed was, we're not going to be able to exchange checks between Federal Reserve districts for at least 2 weeks. Honor all items. Meaning pay them, whether you think they're good or not, you're not going to even know, you got to pay them. Wow. Our little bank had $45 million in suspense for about 3 weeks. At the time, the bank was about 180 million in total assets. So
there's the percentage.
Yeah. So anyway, we've had so much going on, and that's a long explanation, but there's been a lot going on, and our team has risen to the occasion, and our Heartland clients and our communities really, are better off for it.
No, I actually appreciate you sharing all that and going into more detail. It's really interesting. I guess you don't think about the intricacies that happen behind the scenes with these programs, but good segue. I mean, speaking of your employees, I mean, do you feel like you've made a relatively seamless transition during the whole stay-at-home order? And, what are your plans going forward for, businesses as you start reopening and, this next couple months with your employees? How are things going to look?
Yeah, first, our transition to going working from home. And we were bannering that around before this happened. We've had more and more talent that wants to have a work-life balance. They want to have we have skilled people that are not closer to our Whitehall corporate headquarters. We've got an operation now in northern Kentucky. We were starting to have those conversations already. We were able to get about 80% of the bank working remotely in 4 days. And that's just unheard of.
Right.
It was clunky. It was, we had people working on old surfaces and things we were going to recycle and other kinds of stuff. But our tech team made it happen, and that worked out well. Brian Montel really has led the charge. Our bank president. I was in Florida and had to come back and quarantine for 14 days and such. So he started on the ground here in the beginning of late February, early March, of mobilizing our group and getting ready and getting remote before we even had the CARES Act even came down the pike. Then the CARES Act occurred, and that's a whole other story. But what we're doing now is we've kind of settled into the new normal. We are still not allowing customers into the lobbies, but we are still servicing them through our remote channels. Who would have thought the good Lord would have allowed us to get that, technology platform conversion done right before this. So everybody now is up to speed with the latest and greatest technology. Although it might be new, we still have some speed bumps there we're working through. But the new normal, we're now questioning ourselves and saying, what does the new normal look like? What is going to be our work from home policy? Because now you have to have one. Everybody's done it. People have also, by the way, all the listeners that might work in a company and think they want to work from home, you've already written the first chapter of your resume of whether you're qualified to work from home.
Right.
I don't know if
good point.
Don't know if you've thought about that, but
yeah,
the genie's already out of the bottle there. Okay, so if you were a superstar when you work from home, hey, then you're probably going to get a green card. You're probably going to be able to jump in there and start doing that and have a little more flexibility. If you didn't, there may be some dues yet to pay. So we are still figuring that out of what the future looks like. But we look forward to getting back out into the communities and such here in the coming weeks. The governor extended the order, as you know, for
I saw that.
another 4 weeks. But you can go to a retail shop and you can. It's. I'll be honest with you. I think the numbers and the way that they're reacting to it is starting to lose people, unfortunately, simply because they just don't make any sense. They don't. A lot of them don't make a lot of good sense. The mask thing they mandated, and based on public opinion, they're going to change that. Well, if it's all about public opinion, then you probably ought to just be more like Florida or Tennessee and start opening up the state, because people are hurting out there. I mean, we're killing businesses every day. When we call them today, matter of fact, I was on a call this morning, and our retail folks, of course, it's a cascading thing with the PPP program, right? The very first people that get aid usually are the ones that have the best accountants or the people that have their hands on the material right away. It's not necessarily they're big. It just happens to coincide that they have really good financial reporting and they know what they're filing for because they are maybe a larger company. So, the folks that we got to call, yesterday and the day before and tell them that they got money. I mean, those people would fall into tears.
Sure.
And just say, thank God you've saved my company, and I'm going to be able to bring my people back, and I'm going to be able to pay my bills and myself. And we had people for the first time ever have to go to a food pantry.
Crazy.
Because they're sole proprietors and they work, for themselves. So,
right.
So anyway, the long answer to a short question, but you had 3 questions in there.
No, you're good.
There are a lot of other things happening. We're looking at the new normal and trying to figure that out.
Right. No, it's so scary because, I think so many of us who are in a good position, or for whatever reason, or whatever reason that might be, I think that we tend to forget, or because we don't see it, it's not in our neighborhood, let's just say, that there's people that, the first thing you do, of course, is you want to pay your rent. You need cash for your rent, right? You need to pay, your utilities. You can't use a credit card for that unless you do a cash advance. And then everything else can go on credit card. And then you don't really have to pay the credit card. Of course, the house, the car, maybe you got to make sure it doesn't get repossessed. But when you go 2 months without income, I don't know that the average person has a ton of emergency money sitting around. And this kind of starts to compound on top of itself over time. And that's what I think people don't realize is that, especially for those who maybe are a little bit more fortunate than others, how many people out there are suffering. I was talking to a guy on the phone yesterday who, we were having conversations about, retirement planning and such. And he says to me, hey, I appreciate you following up, but he's like, right now, honestly, my life's in shambles. I'm spending all my retirement money right now. And honestly, I don't think I'm going to be able to reopen. He's like, I think it's over. And he like you said, it's tears, different kind of tears, obviously, not tears of joy, but it's so sad to hear these things. So, I think that there's a lot of people that are hoping when this is all over that we can look back and go, man, I hope this was worth it. I hope it was a good idea and maybe we'll never know. I have no idea, but it's great to hear that you're hearing so many good success stories, because I think we need more of that positivity right now.
Yeah, we've heard just as many bad stories, from folks dealing with maybe another financial institution that hasn't been able to. Think about it this way, just to defend the big banks, okay, just for a second, is that they're too big to fail is still alive and well, okay?
Oh, yeah.
They're too big to succeed too when it comes to these kind of things. They just simply can't get to everyone, and
too many people.
It's not about the ability that they don't have the ability to help everybody and all that. It's just a matter of there's too many people in line to have an individual conversation.
Right.
So if we would have had, if we would have been that big, the same thing would have happened to us. Okay. So community banks are closer to their customers. You don't have to tell your story. Everybody already knows who you are generally. And so that is all that relationship building that you've done over the course of time pays off in times like these.
Right. Yeah. Well, speaking of relief efforts, what do you, aside from the PPP, because we know about that already, but what kind of things are you seeing at Heartland either now, or what do you see coming down the pike in terms of other things that may help soften the blow, and how your clients and other people listening can help to soften this blow with their businesses and with their personal lives, families?
Well, there's never been more impetus put in by the federal government so quickly. So if you look at the financial crisis, the total amount of aid, I think, in the financial crisis, primarily to financial institutions through TARP and other things, may have totaled like $1.5 trillion and
over time.
It took like 18 months to even get that fully deployed. We're talking about deploying $2.5 trillion, maybe $3 trillion in a matter of 60 days.
Right.
So I really am curious as to see how quickly that ramps up, and we're starting to see a lot of the byproducts of that now. So people that did, subscribe to the PPP program, they went back and told their employees, and some of their employees refused to come back to work because they make more on unemployment than they do.
Wow.
Than working for the companies that they have. So basically, the demarcation there is about $40,000.
That's interesting.
If somebody makes $40,000 or below, with the added federal stimulus here for 8 weeks of $600 a week, those people now subsequently make like $52,000 instead of $40,000. So they're making the decision of, I make more to be on unemployment. It really is hard on people that have a pride factor that never want to, they're able-bodied, they're going to work, they do not want to claim unemployment. Okay, right. So I've seen that, seen close to home with some of the people that I know, and they are being ridiculed by their fellow workers. Why are you working? We can all make more money on unemployment. Why are you going back to work? And again, that's it's just a reality, whether you like it or not, or that's what you've chosen. That's totally up to you. You're right. It's America. Everybody gets to choose their path. But the loyalty of those employees right now is being sought after by their employers to come back and help them if they had, if they got the PPP loans and things. Now, other things that you asked about specifically, a lot of the PPP program is really the lowest level. Now, there are two banks. Jobs Ohio did a deal with the People's Bank of Marietta and First Federal Bank of Defiance and Home Savings Bank. So write those down.
Okay.
They got $50 million from Jobs Ohio to do individual grants for low dollar loans. Okay,
Really?
with unsecured and everything else. That's a whole other pot of money here in Ohio that is a good thing. I wish they would have included all of us in that, but they didn't. But call up those guys and ask them for your free money, because there's money out there right now that you can get. It's a note, but it's unsecured. It's on preferable terms. You don't have to have any collateral, and it's so that's another avenue there. I know that there's other things too. The Restaurant Association is working on some stuff. The federal government, they've talked about another round of funding and another round of things. I don't think that's going to happen. And the reason I don't is the narrative now on a national level has started to change, really to let's open up and get the economy moving again. The liberal side of the aisle, the left side of the aisle, is already now talking about how it got screwed up and they've been named a commission with all Democrats, and now they're gonna go hunting for bear there. So if everybody's interested now in starting investigations and stuff again, then they're not going to come to any bipartisan legislation to help anybody anymore. So
that's an interesting take, because what I keep hearing from people is that they think that there's the next big stimulus coming that's going to be even bigger than the first one, and it's going to be for big and small companies. So you're just not seeing that, huh?
No, the big company stuff, you got to remember above, they had the Main Street lending facility. They just modified that. Now there's 3 versions of the Main Street lending facility. So if you took the level of stimulus that's out there, and I'm going to get some of this wrong, but I'll try to simplify it for the group that's listening. We have the CARES Act, version 2, which was really gave a bunch of benefits to folks, right? So they have the ability to get PTO, the stay at home, the extended stay. They get, if they have the virus, they get paid for that, and that's additional to their time. If they need to be quarantined, that's additional to their time. It all really was rolled around employees and employee time off and pay, employee time off with pay, all that mandated a lot of different things. So that was like the first round. Second round was the PPP, and then you saw 3.5, which was the PPP2, the second round, which is still available, by the way. As of I'm talking to you now, we're still taking applications. There's still money available.
Really? I thought it was all gone, so it's not.
It's not all gone, no. And the reason being is that you got to remember that the requests that most banks are getting now for the PPP are much smaller. I mean, we're talking about the sole proprietors, the people that are that person's payroll or something might be $30,000 for 2 or 3 months, not $200,000 or $1 million, for the larger companies. So that amount of money was almost the same amount of money is lasting longer. Okay, a little bit longer. We still have. Let me see. Last time it lasted a week and a half because the big banks are on the sidelines. This time the big banks are not on the sidelines, and we still have some money left, but who knows how long it'll last. So you have that going on. Then above that, you have the Main Street lending facility. Main Street lending facility is through the Federal Reserve Bank, and it is a combination of bank financing with a participation from the Federal Reserve. So it's at preferred interest rates. It's a 4-year deal. It does take a security position. So the financial institution currently that has a security position in those assets can't better itself, and they share in the loss pari passu, which means the same. So but that starts at $500,000, and I think the cap on that's like $15 million. So that's for larger companies. And then as far as municipal bond purchases, the Fed has about 10 programs they've done, and most of that is for larger businesses. Businesses that might be publicly traded, national companies, syndicated credit, those kind of things.
Okay. So would it be safe to say that at this point, as opposed to the myth that the PPP is gone, and if you're a business owner, small business owner, that there's nothing you can do, that they could actually call up or, jump online or come by one of your drive-throughs at your branches and apply and still have a good chance of maybe getting something?
Yeah, well, right now, as of today at 10 o'clock, what is it, 10:31? Yes.
Okay.
We're on a time frame. Matter of fact, you can go into most any community bank, I think, and talk to them. I think a lot of them have gotten their initial customers done, and now they're reaching out to some other folks. But I would go to the place that has your checking account, even if it's a big bank. Please check there first, because they already know who you are. There's a lot of things that already have an account, such and so forth.
Okay. All right. What are your thoughts on, I know this is kind of maybe getting in the weeds here, but what are your thoughts on the banking industry, dividend suspension? I mean, do you anticipate dividends being cut across most bank stocks, or how do you anticipate the financial strength of banks, both big and large, going forward as this thing kind of plays out?
Yeah, well, thank goodness that going into this, we had the strongest banking system we've ever had. All right, we had a roaring economy. A lot of folks, I heard a report or two saying that, well, the economy was already in recession in quarter one. I didn't see that. I don't know. I saw a report of that yesterday. I'm like, well, I don't know what you're talking about. We had a red hot economy, and we basically turned it off. And so the financial system was humming. I mean, doing really well. You got to remember, the banking system has never had more capital, never had lower delinquencies, and was never more profitable than it was before we turned the spigot off. We turned the economy off. And what I would tell you is that the banking system is going to be there to help this time, to help recapitalize companies. The Federal Reserve and the OCC and the FDIC already get it. We don't have to educate them on asset values and all that this time. Last time in 2008 to 2012, they were the ones causing the first bank failures because they were having us write everything. Oh, that house is only worth this. You need to, even though the guy's paying, you got to write it to zero. What are you talking about? Something's worth what someone else is willing to pay for it always. So if the guy's making his payments, give me a break, And so they immediately came through as the first line of defense and said, go ahead and do deferments. Go ahead and do interest only, modify loans, however you need to. We're not going to criticize the bank for constructing assets in that way to help borrowers and retain capital and cash flow. So I'll tell you that I think we're going to come out of this. The financial institutions are going to come out of this pretty good. I think there's a little sandbagging going on when you see the largest companies taking all their money and throwing it in the loan loss reserve, and being ready for Armageddon. I just don't see that that's going to play out that way. It's my own personal view. Of course, I don't run a big bank, so I'd probably, not on that pay grade. But I can just tell you that our stance has been that we're going to take it as in strides here. We're not going to panic. First of all, we don't really know. Things are so fluid; it change on a daily basis. So there's really no reason for us to put ourselves in a corner and be Chicken Little and start saying the sky's falling. So what we're trying to do is just take it a day at a time. We're gonna lockstep into this and see how things progress, constantly measuring, constantly adjusting to the environment. But the financial system is going to be just fine. Matter of fact, the big banks in the first week of this crisis raised $60 billion in equity capital. More and more equity items are coming out now, along with sub debt and things of that nature. So bank stocks are under a little bit of pressure, as you might imagine. But overall, I think the banking system will be healthy. You ask about dividends. Most stock buyback programs have been suspended by this point because they are preserving capital. I imagine you might see some of those creep back up later on, depending on how bad how bad or not bad the crisis is. Later on in the summertime. But as far as a dividend, most banks from what we see, are maintaining their dividends. If they make enough money to maintain the dividend and pay the dividend, then they're continuing to pay the dividend. Stopping paying your dividend is a big deal, and that is we've only paid our dividend for I think 105 consecutive quarters.
Wow,
so
that's impressive.
Yeah, we're very proud of that, and I'm not going to stop that streak now. So
right,
I think this is the time. Also, we have a lot of folks living off our dividend, and they need that cash flow. So, so I don't think you're going to see a lot of dividend suspension unless things really get worse. Now, the other side of that is if we have a resurgence of the virus, we have another virus, we have some other catastrophic event, happen. I can see where that might be the case. Final point, I guess, on that question is that I kind of see the big carnage here happening with the big box stores, the big retailers, the large shopping centers, hotels that are really about conventions and gatherings and concerts and things of that nature. I think those areas are going to suffer longer. The travel industry, particularly the cruise lines, are probably going to be hurting for a little bit of time. And then those primarily are banked by larger institutions. And so I think that's why you see them raising capital, putting money away, and getting prepared for tough times.
Yeah. Well, I'm kind of along those lines. You mentioned that, you guys are still paying your dividend. There's no issue there. And I believe, to the best of my knowledge, I don't believe Heartland Bank would be affected negatively at all. But I mean, what are your thoughts on the fact that so many people have lost their jobs, even if it's temporarily so, and as a result of the high rate of unemployment, that it's likely that credit cards and banks that obviously back those cards could fall delinquent maybe in the not too distant future, just as a part of the whole compounding effect? Do you see that happening? And or if so, if not, I mean, what's your opinion there?
Yeah, I actually have really good insight into that. Not only do we have our own credit card portfolio, but I sit on a bank board in Tampa, Florida called TCM Bank, and they're a credit card only bank. And they do credit cards for, I think we have about 2,000 financial institutions around the country, mostly community banks. What we have found is that the lower Beacon score folks are starting to become delinquent. But it's not overall as a pool. And we found in our own credit card portfolio that we've not had a significant run-up in balances. So we've not seen a big run-up in balances. We are seeing purchasing and interchange is down. Okay, we're seeing account balances rise, and that's because the governor doesn't want us to go out and do anything. He doesn't want us to go out and spend any money. So
I'll tell you, my personal and business credit card have been lower than they've been in years.
Right, and you're getting a lot. You got to remember, 60% of the economy is still working. They're working from home. 40% of the economy has been really shut down. But you hear that squeaky wheel gets the grease, right? So if the restaurant industry didn't stand up for itself and say that all of our people, they're not going to get any bailout money, it's just, it is people have to, usually the ones that are hurting the most are the ones most vocal. But you haven't heard the insurance industry complaining, right? Actually, the insurance industry is making money hand over fist. Why? Well, because no one's driving. They're actually giving rebates back. A lot of them giving rebates back. I was talking to an insurance. Yeah, exactly. So, I mean, they are trying to do their part, even though they're trying to look like good guys, even though the 40% that lost their livelihoods, or not, that have that at risk because they had to get shut down, don't have business interruption insurance. That that's a big debate going on now too, which is going to be dead on arrival. If you didn't pay a premium for a benefit, you can't claim one. Right. And so that's really the end of that story.
Can't go buy your car insurance after getting in an accident, right?
Yeah, that's exactly right. I'm sure that they'll have that now. That's going to be another thing. And if you want to pay for it, it might be worth it now. Who knows?
Yeah, it does. Changing gears here, you mentioned earlier about acquisitions. I found it interesting. Earlier this year, obviously, you had the acquisition you talked about. Are you looking at the pandemic from a cup half full mindset, from the standpoint of, obviously, while this crisis is no fun, has it potentially created more opportunity for future acquisitions for you?
Well, I think for the whole industry, we're in a consolidating industry, and it's really based on performance to start off with. But crises like these, yes, people say, I'm 65. I don't need this anymore. I'm done. I don't. So there's some folks. I'm not 65, but there's some people maybe saying
that clear.
that
Let's make that clear.
Yeah, I'm 60. I have
32?
65 years worth of.
Yeah,
I have 65 years worth of mileage on me, but I've only been on the planet for 53 years. I think that there's going to be some more M&A once things heal a little bit. And again, it is really the impetus of performance overall. So if you built your ship to last, then this probably isn't going to phase you much. If you were thinking about exiting before this, you're trying to get healthy so you can exit. If multiples come back as well. So yes, I think there'll be some more acquisition activity out there. Just overall, the financial services world has been consolidating because of technology, and frankly, the cost of doing business and the compression of the spread. So right now we have rates nominal 0 Fed funds rate. It's hard to work on a spread business, which is the difference between deposits and loans. It's hard to work that way in a 0 interest rate environment.
It's tough, yeah. And you kind of alluded to this earlier, but I'm going to ask anyway, or ask you to elaborate. You obviously, I mentioned earlier, your bank's been around for more than 100 years. So it's an organization. It's one that has seen its fair share of outbreaks, stock market crashes, recessions, and obviously you've been around even long enough to have seen the Great Depression, right? So, which, by the way, I mean, many are worried about a potential depression as a result of the virus, but it sounds to me like your thoughts are a little bit more cup half full, a little bit more optimistic about the economy going forward. Could you kind of elaborate on that?
Yeah, I mean, again, this is probably not Heartland Bank's view. So this is Scott's view. We have to plan for the worst times, obviously, we're a very conservative shop. My personal view, though, of what is going to happen is I think that I'll be honest with you, I think we've dodged a major bullet here. Just think of how much worse this could be if we had a virus that turned your organs into mush. Really, we don't have that. We have a treatable virus, one that affects a certain age of the population more than others. It has affected everybody. There has been a lot of death, and I don't want to belittle any of that. But what I do want to mention is that we really have to be prepared. And what we found is that the supply chains in America are inadequate to react to this kind of crisis. We've further uncovered that China has taken advantage of the world, and we still haven't seen whether or not they, whether they intentionally caused or it was an accident or what. They're still doing investigations to figure out where the virus actually originated in China. It did happen in China, so that's not a racist comment; it's a fact. I think that my personal view, though, is that America gets stronger from these events. Every time we get forced with this kind of adversity, generally people start to realize what's really important to them, and the fact that it doesn't matter whether you're an R or a D, it doesn't matter whether you believe in what other issue. We're all Americans. We're all in this together. And I'm sensing that the country's going to try to come together a little bit more here in the future. I think our economy is going to rebound from this, and it's going to be led by those companies that are the strongest. But look at how many have jumped in to help create things, and a lot of them didn't even have to be mandated to do it. Some did, but others volunteered to come and do their thing. And so I really feel that the economy is going to come back, probably stronger than ever, but it's going to take a little bit of time. And again, we've put out these the unemployment rate is not going to come back as quickly as we would hope. I think GDP will, but I don't think the unemployment rate will, simply because there's so much incentive out there, and everybody's gotten dispersed from their current job. If they, those jobs get filled by other folks, it'll take several months for that to slow, to drop back to normal levels. Probably won't see 3% or 3.5%, 4% unemployment for the next year or 2 years.
Sure. No, I would tend to agree with you. I think that we'll absolutely end up stronger than we've ever been, and I think that there's going to be tons of opportunities for growth on the other side of this thing. I just think that people are going to have to exhibit a lot of patience and try not to get too frustrated, because you don't fix a broken leg that fast. You gotta give it time.
Okay.
Well, I think we'll end there. Thank you again so much for joining me. I really appreciate all your time and insight. And again, I can say with the utmost authenticity, I mean, I admire you, what you've built at Heartland. And I can only hope that more people follow in your footsteps as the economy here in Central Ohio comes out of this virus on the other side and continues to flourish here in Central Ohio. So thank you again for being here and offering so much valuable information and education. I really appreciate it, and I'm sure our listeners and those watching do too as well. So everyone, that's it today. We realize that there are thousands of podcasts out there, and you chose to listen to ours. So thank you so much for listening. Be sure to subscribe on iTunes and YouTube. Feel free to share this podcast with your friends. And if you want more educational information, you can sign up at our website at libertaswealth.com to receive screencasts, videos, articles that we send out on a regular basis. Again, you can also follow me on Twitter, Adam Koch, and on Instagram at Financial Surgeon. So thank you so much again for joining us, and we'll see you next time.
Thank you for listening to the Cash Podcast with your financial surgeon, Adam Koch. To see any charts or images that were mentioned in this show, or to check out additional articles, videos, and other educational resources, head over to libertaswealth.com.